Good morning, Wall Street winners. It is Thursday, October 31st, and it is Halloween in North America. We're in for a bit of a scary day, I think, in the markets today as well. We've had some results out of Meta and Microsoft, and both missed expectations, which was more of a surprise for me on the Meta side than on the Microsoft side. But we'll get into that in a minute. We can see that crude is again, starting to slowly continue its recovery. It's up now at $69, so it's up 40 cents on the day in the pre-market trading session for December 24 futures. The NASDAQ is off 180 points, which isn't a huge amount in percentage terms. If we take a look at the Bloomberg market section and the futures, you'll see that all three indices are in the red. The Nasdaq's off almost 1%. The Dow is off 0.5%, and the S&P about 0.7%. So it looks like it's going to be a red day. A lot of this coming off of the numbers from Meta and Microsoft after Google set such a high bar and really demonstrated how great Google's earnings were. So here's a company, Google, that analysts believed was going to be one of the most impacted by OpenAI and the whole AI adoption because it could cannibalize its search business, and its ad revenue is primarily dependent on its search business. But Google has dug down and doubled down and invested heavily and demonstrated that they're able to compete at this level, this new level with AI and enhancing their search engine, as well as all of the other ancillary business units that they have, which they've done an outstanding job with. So if we scroll down through the list here at health and retail to begin with, we've got Costco down in the 870s. I love Costco in this price range. But I'm also very skeptical today, tomorrow, Monday about doing, and Tuesday, the next 4 trading days about really buying and holding anything. I want to try to get out of almost all of my positions before the US election on Tuesday. Now, the good news coming out of this is Trump made an announcement yesterday that he believes he's going to win by a landslide. And knowing that Trump basically lies about everything, it's pretty clear that he is very, very nervous going into this election that he is going to lose by a landslide. So, with that said, maybe there's less to be concerned about, but I'm still very worried about him or the Democrats questioning the results, delaying the actual election results and the announcement of who is going to be and what party is going to lead in the Congress and the Senate, and obviously what individual will take the White House position as president. So there's a lot of volatility that I'm expecting in the next 4 days. So I want to make sure that I'm looking for positions that allow me to get in and out on the same day. And if I can't find that, I'm just going to stay out. Now, the other way to play this is you could look at playing stocks in other countries. So if you look at Canada as an example, where I'm located in Toronto, you could look at playing a few more things on the Toronto Stock Exchange. But I also feel that there's the high likelihood that if the US markets dive, so too will other markets around the world. So I'm just being overly cautious and trying to mitigate my risk. My returns have been pretty decent this year. I'm quite happy with them. So I don't want to risk losing them. Now, that said, I do believe it's going to be temporary. And I believe that if we see a drop, which we have in previous election outcomes, we will also see a rebound. Now, it may take a while, but I think we'll see a rebound before the end of the year back up to current levels. I'm just a little skeptical and a little nervous about that. And I'd rather have a higher cash position, maybe not all cash, but higher cash position, more dry powder, so that I can buy in if there is a dip, but not on the dip. I want to buy in on the recovery. I want to make sure that it doesn't dip one day and then dip further on day 2 and day 3 and maybe day 4 and 5. So I'm going to wait until I start to see and believe that we may be in for a bit of a recovery. And I'm only going to buy into the stocks that have earnings announcements coming out after the election and are highly likely to beat on earnings and are producing a great deal of free cash flow and have positive and growing earnings and revenue. Those are going to be the three things that I'm looking for. And I think I'm going to find most of those in technology. So if we continue to scroll down, you can see that oil stocks look like they're going to have at least a green start to the day. And that's all going to be dependent on what crude oil futures end up doing. But right now, they're still up now 37 cents as opposed to 40 cents. We get down into tech, and this is where I think we're going to find some incredible buying opportunities. I'm going to call it the Black Friday sale for tech in the stock market is coming in the next 4 to 5 days. So looking at some of our favorites, I really like Micron. They don't announce until later in the calendar year, before the new year, but later in December. Palantir is going to announce, I believe, on election day. So that'll be an interesting one to look at. Apple obviously comes out after market today, and I am very bearish on Apple right now. I do not believe that Apple is going to have stellar results. And even if they meet expectations, I think we have to be concerned about future forecasts because a new iPhone 16 is not a requirement. And with consumer discretionary spending focused on areas around, I think, on areas around consumer staples and needs as opposed to wants, I think, like Lululemon in health and retail has been hit, I think Apple is going to suffer from that same thing. If I were to short a stock right now or buy a put option, it would be on something like DJT, which is the Donald Trump media, or Reddit. Reddit had an incredible day yesterday, but when you look at the earnings of Reddit or the earnings of DJT, which are insignificant, I think that these stocks have shot up to levels that the stock price can't be justified for the long term, and they just have to pull back. And when they pull back, they're going to pull back huge. If you remember Snap a few years ago, Snap was trading at $75 a share, and it fell down to the $10 and $12 level. So it eliminated 80% of its value in a few days. It was a huge, huge drop that it had. And I think the same could be true for sure for Donald J. Trump media, but for Reddit as well in the coming months before the end of this year. So I'm very, very cautious on those two. Certainly wouldn't be going long on those. Then we get down into some of the cybersecurity stocks, which we have not yet heard from. So Palo Alto, this will be an interesting one to get results out of. Net, I'm very bullish on Cloudflare as well. And then we've got CrowdStrike, which is coming out as well with earnings in the 11/26, so the end of November timeframe. So well after the election, but there may be an incredible buying opportunity to get into the likes of Micron in the 90s, get into the likes of CrowdStrike in the 260, 270 range, and get into the likes of Palo Alto down in maybe even the 300s. So let's see what happens when we see that volatility. Microsoft's another one. So yeah, Microsoft is having issues around cloud growth due to capacity limitations is what we're hearing, but they're going to throw more capital at that. This is a company that's throwing billions of dollars, more than they've ever spent in the past, into capital infrastructure to support AI growth, which they're saying is going to be the fastest growing segment of their business for years to come. And they have the money to do it. They have tons of cash. So I think in the long term, Microsoft is a great company to own. And it's going to drop $15, $16 at open today based on how it's set up for the pre-market. But let's wait till that stock pulls back into the 380, 390 range come Monday, Tuesday, Wednesday. And then double down on Microsoft, maybe some call options into March or June of next year at today's price and pay that premium, and then hold those and wait for that to ride its wave back up. ARM's getting hit hard today, down $7.20. Now, this is a company that reports next week. They just announced a deal um, to produce a chip for, I think it was Google. I'm forgetting what the company was right now, but a huge company and producing a great deal of chips. So I think looking at ARM dropping $7. Now, most of the semis are off today, but that going down $7. Wait to see where that lands between 9:30 a.m. and 10 a.m. this morning. I think you're going to find that it finds a bottom and there may be a buying opportunity in there to get in and out of that in the same day. And I think we're going to hear good results based on its involvement with NVIDIA and the AI semiconductor space when they announce next week. Scrolling down further, obviously, after the market today, we've got Amazon reporting. So this will be an interesting one with Microsoft missing on cloud growth due to capacity. We haven't heard about capacity issues coming out of Amazon. With Google exceeding growth expectations because they didn't have a capacity issue, I think we're going to hear some pretty positive news out of Amazon today. But that said, I thought we were going to get much better numbers out of Meta yesterday, and I was wrong on that. So Meta is down $11, $12 right now. It was down 17 earlier, so it's definitely coming back. In the pre-market, Meta's numbers actually weren't that bad. They beat on earnings and revenue. Their concern in the market is around their AI spend. But if we look at others that are spending at similar levels, like Microsoft and Google and Amazon, they're producing results from this. And so is Meta. So there's just concern that where Meta is making investments in the metaverse and in the AI-enabled glasses and Oculus or goggles, then you may be at risk if those things don't pan out. But they're still making the majority of their money from ad revenue. And those platforms, Facebook and Instagram, their social media platforms, are doing extremely well. So I'm still very bullish on Meta. And I think that any drop in that stock is a great opportunity to buy that and get in at a better valuation and do some dollar cost averaging there. NVIDIA is pulling back, but not a lot. And this is a stock that doesn't report until the end of the mid to end of November. And I think we're going to have, again, some phenomenal results out of that. Google pulled back a fair bit yesterday. So this was a stock that was up a significant amount. I sold my shares at 183. It's now down at 176. I actually bought back in at the end of the day at 176. And although it's down about $1 right now, I think we're going to see a rebound here. This is a stock that should be up at 185. And based on its super strong results in comparison to Meta and Microsoft, it should force some money into Google today. So I think getting in to Google at the open, if it's down or even around where it closed at 176, will lead to a $1 to $4 gain today in that stock. And that'd be a nice little percentage win. So that's kind of one of the stocks that I'd be looking to invest in today. Another is TSM. So TSM is now down in the low 190s. And they had some pretty spectacular results. They won't announce until close to the end of this year, or actually now into January. My bad on that one. So they will come out with their next quarter results towards the end of January. I am extremely bullish on TSM just based on what we're hearing about AI spend. So in the 190s, low 190s, I think TSM as an incredible buy. Actually, if we look into that just for a second, and the price earnings are 34 times. So with a company growing at that pace, paying a dividend of 1.27% annually, I think it's an extremely good buy. Now we get down into finance, and finance is a bit of a mixed bag here, green, red across the board. Nothing major, but we have seen a nice little recovery in some of these and a nice jump in others. And I think we're going to see continued growth in financials. We're expecting to hear another 25 basis point rate cut from the US Fed before the end of this calendar year. And just an election result. I don't think the election result, Republican, Democrat, is going to make a huge amount of difference for financials. in comparison to some other sectors, oil in particular, but definitely some others as well. But I think financials will do well regardless of which party gets in. And so I think there's some definite opportunities here to look at. And again, one of our favorites is SoFi. Had a huge day yesterday and recovered after a bad day following great earnings, oddly enough. But I'd wait on a pullback on that. And when it pulls back a little, I would buy in and ride that one up. And then I'd wait on a pullback on some of these others as well. I think Raymond James at 149 is super overvalued. I think it should pull back, kind of like Charles Schwab did. So Schwab jumped and did well after earnings, but now has pulled back and retraced down to the 71 level. Goldman hit, I think, 538, somewhere in that range after earnings, and then pulled back down into the 510, 512 range. Now it's up to 524. I think it has room to get back into the 530s. So there's a bit of a spread there. Morgan Stanley the other day was up in the 120s. Now it's down in the high one teens. I think it could pull down into the 110s, and then you could re-enter there. So again, you don't have to buy in and get in every day, but look for opportunities in value stocks that of companies that you use the services and buy the goods from. And look when those prices come off of their highs or drop for no particular reason, like Costco did the other day. Buy in and then wait for that to recover same day, next day, and get out. But just be very cautious over the next 5 days because of the election and the potential for a great deal of volatility. Good luck in your trades today. And if you're liking these videos, please hit the like and subscribe button.